is this question of how to transition semi-skilled agricultural labor into more productive parts of the economy. And it's something that everyone's grappling with, but we haven't seen a huge amount of movement, and if we don't solve that, then it's a global issue. And I think that's where our demographic sort of question mark will either be something that's a huge positive, and I think, I'm in the camp that it'll be a huge positive for the world, or it could be potentially something that really destabilizes this story that we've seen. So I think if we don't sort out our labor force and really generating enough jobs, I think the implication is that we need to generate about 10 million jobs annually. So I think being able to do that becomes an imperative, and we don't have time to plan for it.
And although there's a lot of colleges, universities coming up, etc., it doesn't seem like it's matching up as what's needed, right? So
yeah, I think in terms of the education question across even vocational, K-12, and so on, our biggest issue, and I think we've actually spent a lot of time on educational infrastructure. I don't think that's the issue at all. It's not throwing money at building schools as much as it is building up and professional development within teachers. So across all of these levels, we really need to build our core set of teachers and pay them appropriately as well.
How does that compare with China? They went through it in the last 10 years, but we are going to go through the next 10 years. That's what the labor force is concerned.
Yeah, so again, same thing for China is that you don't see it hit the same. So India is over a more gradual period, but it hits a higher rate, right? So India is actually potentially, in terms of population and labor force, going to be over the long run a bigger story than China. China hits it, but it was off of in a very constrained period, and then it just falls off. In 2017 is when literally you just have every worker supporting, double the amount of retirees. What China did well, and we all know this, is that they really figured out that they had the supply situation coming on board, and at very local, decentralized levels, were able to build up both vocational as well as schools of excellence, but also basic education. And they also came into their demographic sweet spot at a higher rate as well. If you look at our education levels, we're basically at where China was in 1980 and where Brazil was in the 1960s, if you look at secondary levels of education. So we're starting at a lower base, and we're also not scaling up as rapidly as we've seen in China. And that's what I'm saying. In terms of infrastructure and so on, I think we're getting there, but this is a big goal.
So we'll have more time for Q&A, but yes, if you...
I think there is any data on any analysis on the fact for how many people who are educated to be supporting the manufacturing sector, let's say an IT who's qualified to be actually in the manufacturing job, but would be working in a KPMG or insurance sector or something. Is there any data? Is there any analysis done on that? How is that affecting the manufacturing capacity of this country today? Because probably the best brains who have been trained for manufacturing may not really be there.
Yeah, no, that's a great question. And obviously, I think it's a difficult thing to study and analyze in terms of numbers, and that's something that's being reflected globally. So many people went into financial services and professional services that probably, could have, in terms of thinking about overall productivity, been better placed otherwise. But one of the things I can say is that if you look at what is projected for services employment, which is something about somewhere in the range of 30 million jobs, right? It's important, but it's a drop in the bucket compared to what we need. So that point is there. I've not seen anything that really illustrates exactly what you're saying, but there's definitely work that illustrates the fact that services just will not meet that demand coming on.
Thanks. So we'll have some more time for Q&A, but I want to actually now come from macro 40,000 feet view to really, when it comes down to economies of the cities and a region, private equity, the capital, they play a major role to really harness this entrepreneurial energy that we all say we have in India, especially in places like Punjab and Gujarat, etc. So what I would request Dhanpal Javeri, who was the CEO of and heads Capstone Capital here, to really first of all just give brief background on Everstone, and then how you work, and then particularly, Sampal, I was keen on some of the case studies you and I were discussing, like where you had invested in Lilliput and then the Asian Genco, etc. So one by one, if we can talk about how those companies were formed and how did private equity get involved and added value, that would be useful for everybody.
Sure, Pradeep. Thanks a lot. Good evening, everyone, and I think you all have been very patiently listening to what Rupa had to say about the economy, and it's great also to kind of hear, about what cities like Chandigarh are doing, and not just to hear about it, but to come here and experience what's happening in this city in terms of, the last time I came here was some years ago, and I think one of the things I noticed very clearly was more traffic jams on the streets. It's a common sight in Bombay. I guess you guys in Chandigarh will start getting used to it over here also. And that clearly is kind of, a kind of indicator, as we say, that many times we keep talking about strategy and growth and all of these things, and it's so evident that in a country like India, we need just about more of everything. And that fundamental view is what we in the private equity world really are very, very bullish about. That this is a country which structurally over the next 10 to 20 years will see dramatic growth, albeit in the typical Indian way that we will, in the dance of democracy, move 2 steps forward, 1 step sideways, and maybe half a step backward. But nonetheless, I guess the journey will be moving forward. And as a result, what we've seen in the last 10 years is that the country has seen a significant amount of private capital from foreign investors coming onto Indian shores. At this point in time, close to about a quarter of our foreign FDI, foreign direct investment, actually comes through private capital. So we've seen this year close to over $7 billion being invested. Every year, $8 to $10 billion at least come into Indian businesses. And this is again a reflection of what the global investing community believes is an opportunity to generate higher returns through long-term capital investing in India. The business, when you look at private equity, there are lots of forms and variants of it. But broadly, what I like to talk about is what we call growth capital investing, which is investing in young businesses, growing businesses. Largely, a lot of these businesses are first-generation entrepreneur founded businesses, and businesses which we believe over a 3 to 5 year period have an ability to at least double or maybe even triple from where they are today. And this is a form of investing which is I would say quite difficult. Generating returns through this kind of investing is not easy, and largely because I just think there are 3 fundamental reasons why we believe one needs to have a different view on putting such capital to work in India. First and foremost, the private investing market in India actually doesn't offer any sort of price arbitrage. And what I mean by price arbitrage is that if you look at China, if you invest in a private company in China, you're likely to buy into that company at a multiple which is lower than what a similar company would trade in the public markets. Now, this is what I call price arbitrage. You buy a company in the private markets at 8 to 10 times earnings. You basically spend 3 to 5 years helping the company grow, and then you go get that company listed and you hopefully sell it in the public markets at maybe 12 to 15 times earnings. In India, it's actually quite the reverse. The Indian entrepreneur, I think, is the smartest capitalist on planet Earth. I'm sure a lot of you will agree with me, that it's not easy to extract value out of just, a price or a valuation discussion. As a result of that, it's clearly, I believe, one of the key issues. It becomes more difficult to generate returns in India. The second is what I call the kind of war between strategy and execution. World over, if you see, a lot of investing is driven by the strategy around that particular investment. In India, actually, strategy doesn't matter too much, because if you're making a widget, you're providing a service, you're building some sort of a road, you're bound to generate demand because demand's already there. The question is always supply doesn't keep pace. So it's really how do you actually build that road? How do you build that vision and get into the markets? How do you basically provide services which meet customer requirements? It's all about execution. It's on the ground execution, and that's where we believe. It's really how do you make sure that once invested, the company is executing their strategy well and differentiating themselves amongst the umpteen competitors which are out there in the marketplace. And the third fundamental issue I believe is that you can't time markets in India. Like I talked about the dance of democracy, is always you're bound to see a surprise on the corner. 6 months, 1 year down the road from what you see today, the world's going to be very different. And that could be for 20 things which you never factored into your business plan. So how do you plan for that? There's no real way to plan for it. The only way to live it is to basically have duration of capital. So what we believe is that where private capital works is because they come with long duration of capital. Our fund, for example, has a 10-year, 12-year life, which means when we put money to work, we actually stay invested for 5 to 7 years. That allows us to ride cycles, that allows us to, I would say, smoothen out the kind of turbulence which we typically see in the Indian markets, and allows us to hopefully over a period of time actually create positive value in the business itself through a fundamental growth in the business. So 3 things, like I said, you can't really arbitrage price, you got to focus on execution and make sure that your capital is long-term in nature, so eventually you hope to be making money in this marketplace. Having said all of this, it becomes very, very difficult to generate returns in India. But if you have the right operating mindset, and that's where, we at Everstone, having looked at this whole market and seen, how difficult it is to make money, we realized that we had to focus and look at India with a very operating partner mindset. And what I mean by that is really, you can't be basically expecting to buy cheap and sell expensive. You can't really be investing and being a passive investor where you just sit back and hope that someone's going to make money for you. And you have to be there for the long term. You can't be a short-term investor, fair weather friend, where you just want to invest today and sell tomorrow. So we built an organization which today has possibly one of the largest pool of talent in the private equity industry in India. We have over 100 professionals working in the firm. We have offices not just in Bombay, but even in Delhi and Bangalore, Singapore, as well as in Mauritius. So it's a large footprint, 100 professionals, all dedicated to basically, once investing in our partner company, working alongside the partner and helping create value over the long term of time. So it's a really simplistic model. We really believe that at the end of the day, if we can walk alongside a strong entrepreneur, back a high quality business, and work with them to actually grow those businesses substantially, eventually we should find returns through those activities that we actually undertake. So having said that, we have over the last 5 years since we started raised about $1.6 billion of capital. We have investment in 2 asset classes, $1 billion dedicated to private equity, investing in private companies as growth capital, and another $600 million which we invest in developing different types of real estate assets in this country. On the real estate side, really, we are more sub-asset class focused, wherein we invest in industrial real estate, retail and mixed-use developments. On the private equity side, we have invested about $400 million out of the $1 billion that we have under management. This was invested in about 17 companies and ranges across consumer businesses, manufacturing entities, industrial and infrastructure businesses. We broadly believe there are 2 themes which make investing very exciting in India. The first broad theme, and I think Rupa talked a lot about that, is domestic consumption. The country today, about 56% of the country's GDP is basically driven by domestic consumption, which we define as everything from loans to phones. Service companies, FMCG companies, white goods, brown goods companies, financial services businesses who support retail spending, all kinds of activities around that. The second big theme is, as we all know, that India needs to develop its infrastructure. I think one of the key concerns we have is that if we don't build the infrastructure fast enough, all the growth that we're seeing will get constrained because of poor quality infrastructure. We just saw the power sharing happening right now. This is a fundamental driver to any economy growing in any part of the world. And if we are to continue growing at about 8% per annum, we have to develop more, generate more power. And given the way our government and our various ministries are behaving, I think we're going to continue to see brownouts for quite some time, maybe another 5-7 years before we can see power reaching all the consumers and both industrial and retail. So that's clearly, these are the two broad themes. Beyond this, I think one of the key drivers we see in this economy is a very clear concerted effort to increasing the share of manufacturing within the Indian GDP. I think one of you gentlemen talked about the very large pool of engineering talent we have in this country. All types of asset classes, be it financial services, or be it consumer products, or be it just reaching, I would say, urbanization, or I would say the decentralization of urban centers in this country. I think is something which will provide a lot of growth opportunity, and that's where we think that the smaller towns have tremendous opportunity. So retail is an area where we see again huge growth, converting from commodity business to a branded business. So, for example, we 3 years ago backed a large garment exporter. So this was a children's garment, manufacturing garments, children's garments. They were actually quite good because they had customers in the form of Gap and Banana Republic and Mother Care and a few other international brands. And they realized that over a period of time that the export market can only provide them this much margin because it's a very competitive industry. Retailers are constantly looking to negotiate with manufacturers and beat down margins. And over a period of time, the only way for them to protect margins and grow the margins would be actually to start building their own brands. So we backed this company when they had a small presence mainly in Delhi. This is a company called Lilliput, which today is the largest children's garment manufacturer and retailer in the country. So Lilliput actually had only 40 points of presence sometime in 2007. So when we met them, Sanjeev Gurula was the promoter of that company, and I had a chat with him and just discussing what his plan was. He said, look, I think that there's an opportunity to provide children's ready-made garments because I think mothers today want their kids to look good and they're willing to spend a lot more than what I used to spend or my mother used to spend on me when I was a child. And clearly, as we saw this changing trend of consumerism in this country, we clearly realized that this was a niche in the fashion apparel business, which was really, some players were there like Ginny and Joni, etc., but possibly they weren't doing it the right way. So that's where we came in. I think they had a very good design and production capability. We came in and supported them on the whole marketing, sales, and the retailing strategy, helped them grow from 40 points of presence to about 650 points of presence across pan-India, from being a regional player to becoming a pan-India player. And today, they are by far the number one children's garment retailer in the country. So it's something which makes us really proud that we partnered with a company which was able to grow so rapidly in such a short period of time. Clearly, at the end of the day, we are financial animals, we are capitalists, we look to returns on our capital. But I think a journey like this to help, create strong, fundamentally, very, I would say, robust businesses is something which gives us also a lot of pride and joy. So with that, I think this is, I would say, a broad kind of introduction of our businesses, the kind of investments we do, and really, here on looking to see how we could partner with Chandigarh in its growth story.
Thanks, Dappa.
So Dimpal, we've spent one day, if you count from yesterday afternoon in Chandigarh now, and of course you've been here before. But what do you see as an opportunity within Chandigarh? I mean, the kind of entrepreneurs, the kind of businesses that are there. You, for example, you talked about investment in Lilliput and in and around this area, again, textile and those kind of things are again quite by interest in Ludhiana and other places, right? So when I say in this region, what do you see as an opportunity?
Sure, I'll ask Deep also to kind of share a few words over here. Because Deep, just for example, just to introduce Deep, besides being MD of the firm, Deep actually is based both in Bombay and Delhi, and actually drives a lot of our investing in the northern Indian markets. And in fact, going forward, a lot of you will be hopefully interacting a lot more with Deep, to see how we could, partner in various opportunities. Maybe what I can talk about really is maybe let me touch upon a couple of sectors and then Deep to kind of add some more. I think the two areas where we think Punjab in particular can actually be great markets. One is we see the entire agri commodity market in which, as we all know, Punjab has been a leader in the agri business right since the beginning of the Green Revolution. We have seen a huge number of activities across the entire agri and agri commodity based space. We think there's a lot of value addition potential in agri and commodities, and that's something clearly if we think that there are opportunities to play over there, we'd be very, very excited to partner in businesses over there. I think value added, again, if you look at textiles industry.
Sorry to interrupt, would you be more specific on agri side?
Sure, so we see there are 2 or 3 themes. So one is basically value addition for agri commodities, so food processing. And food processing leading to branded food products. I think moving from a commodity to convenience products. How do we